In this week's episode of the Investors Corner, we're joined by Chris, who is an expert in commercial property. Now, we don't really hear a lot of information out there regarding commercial property investment, and that's the reason why we wanted to get Chris on. So what are the advantages and what are the disadvantages of commercial property investing? How long is the lease? Is it a long-term investment or a short-term investment? What's the process with commercial property investing and how is it different to the buy-to-let residential? And is it now the right time to diversify your portfolio and look at commercial property investing for a higher yield? So make sure that you listen into this one, and as ever, make sure that you subscribe to the Investors Corner.
Okay, welcome back to another episode of the Investors Corner. Today, we're glad to be joined by Christopher Thomas. We've been asking for a commercial agent for a little while, and Chris has stepped up to the plate as the man who found us our premises and a good local active agent in the Thames Valley. So, Chris, thanks for joining us.
Yeah, thank you, Chris.
A pleasure.
As a first timer, so we're going to get into it. A lot of our clients, customers, listeners obviously invest in residential buy-to-let because that's our stock and trade. Something that we've been looking at Avocado, as you've walked in today, is every single desk is now occupied. We're now looking at the natural upsize is what do we do? Do we go and buy a commercial premises, or do we continue being tenants? Which I guess is a similar vibe to a family. If you're renting, do you go and rent something bigger, or do you step onto the ladder and get something done? So we were just talking off camera. I think there's a bit of a disassociation between people who are very comfortable doing a residential buy-to-let, but very few people get into the commercial property sector as a landlord. I feel like it feels like a bit of a step into the unknown and a bit of a closed shop. So we're going to try and open that up today. So, Chris, what are the differences and why don't people buy in commercial real estate?
Familiarity is the key. So people live in a house, live in a flat, they understand the residential sector. They like to think as though they're feeling their way through that in a known territory, whereas the commercial property market is cloaked with terminology, law that might sound as though it's quite complex and a little bit on the other side, whereas in fact the other side is fairly straightforward. And as you said, if you're expanding a business, then your key factors for whether you're going to buy or rent are firstly availability, secondly flexibility. How quickly is the business growing? What's the right size for it? What's your long-term aspirations? So in the occupier market, which is slightly different to the investor market, flexibility is often the primary concern. So that's why there are lots of commercial properties which are let, which then feeds back into the why would you buy a commercial property investment? So why would you do that? Well, there are some fairly simple reasons to do that. The primary is probably the yield. So in the residential market, I've heard some crazy yields. I think the returns, being the yields, have pushed out a little bit. The law within the residential sector is set to change. There's a bill going through Parliament at the moment, which will make it more difficult to dislodge your residential tenant if they're not.
We talk about
themselves.
That a little bit.
It's my favourite subject, the Renters Reform Bill.
You see how enthusiastic he looks.
That's the one. And what do you do if you've got student lets? How's the law going to impinge on that, and so on? So I think people are probably casting their eyes around a little bit more to see what other forms of property investment there are out there. So we have a range of properties within that sector, primarily office, industrial, retail. There's a lot of sensationalist journalism about how dire the retail market is, why people aren't going to the office, what's going to happen with the office sector. Logistics, very good market, mainly because people do such a lot of buying online. So the warehouses are full. People can't find enough warehouse space. So getting into the commercial sector, you kind of need to be guided by someone that understands it as to where rents are likely to go in order to see where the returns are going to be.
Yeah, I mean, the logistics is obviously, I mean, that's for a big time investor, isn't it? If you ever drive up the M1 or I think down the M5 after you get past Bristol, some of those warehouses take about 5 minutes to drive past.
They are
at 70 miles an hour.
Yeah, Amazon.
It's phenomenal,
Yeah.
the sizes of these places. And from a return point of view, you can see why people get into that. But you mentioned something that I wanted to get onto, which was obviously sensationalist reporting, which we try and stop where we can. So Friday, Cushman and Wakefield reported that rents in London on retail properties are back to pre-pandemic levels. When I was under the impression the world had changed forever.
Well, I was reading at in the weekend. I won't mention the paper, but I was reading that Canary Wharf, which has gone through a change of ownership, the retail sector has now just reached past pre-pandemic sales within the shops that are there. So yeah, people are recovering, but there are subsectors within that. So you get to hear about the great big glitzy schemes, but actually neighbourhood parades are very popular.
Yeah.
The government has carried on the 25% relief on business rates. So that sounds as though you get 25% off of your business rates if you are an occupier, a tenant. In fact, you only pay 25%
of it.
75% reduction. Yeah. So as soon as that came in, we thought, well, hang on a sec. That means that rents are going to be more affordable. So as the pandemic has passed, neighbourhood rents have gone up. So in this area, we've carried out 3 rent reviews, 1 lease renewal on the parade of shops in Binfield.
You can stay away from me, Chris.
All the rents have gone up. You can become a little bit overly forensic on what's going on. The surveyors, we talk about rental tones and what's it break back in terms of zone A. Now that's enough to make you zone out.
Yep, a little bit. Yeah, I was gone.
You start thinking, hang on a sec. I mean, you can get very technical. But I've been doing this for 40 years, and I can stand outside of a property and say, right, how much is someone going to pay for that?
Yeah.
Where is the rent going? What's that going to affect the yield? What's the return going to be? So if we plug back to the industrial sector with big Amazon warehouses and so on, you don't need to be into that size. We sold a property in Windsor, 8,000 square foot warehouse for 1.2 million. That might sound like a lot of money. It's in investment terms, we sell anything from £200,000 upwards. So at 1.2, we let that to Lapland UK Limited, and the clients are now getting a return of about 9% on the yield. They had to spend a little bit of money to bring the warehouse up to date, but that's a good return when you compare it to the residential letting market.
Yeah, what sort of average yields do we see in commercial property then? Because the average yield for a buy to let is, I don't know, let's see, sort of 5 or 6% for a decent.
Yeah, I reckon 6%.
One.
I think we're back to about 6%, given the increases on rent and the decline of asking prices.
Yeah,
and maybe leaseholds you can go over 6% on now. But obviously the costs have gone up.
Yeah,
so
and with HMOs as well, we might see 8-9%, maybe 10%. So it'd be interesting to sort of, take a buy to let or a HMO investment and then compare it to commercial property and what the average yield is on that. Because I think with commercial in investing, I don't see a lot of information on it. The people that I speak to don't know anything about it. But I think right now, if you want to diversify your portfolio, then commercial property is definitely something that's worth looking into. And whether you do that by yourself or whether you go jointly in with someone or something like that, it's definitely worth looking into, because obviously it might depend on your long-term goal as well, because commercial property might be longer leases compared to your normal buy-to-let properties. But yeah, it's just interesting to know what average yield that you're seeing on commercial properties right now.
Yeah, it varies a little bit to the residential market. I don't think it's as management intensive. So you're not being called, or you don't have to employ a managing agent because Miss Jones's light bulb's gone out, or the radiator's not working. Come and fix my boiler, and so on. The tenant needs to take care of that commercially. So there's less ongoing running costs. Generally, you get longer term leases. So 5, 10, 15-year terms. You'll have a rent review within that, typically at the 5th year. So the rent will stay the same or go up. It's not quite as cut and thrust as the residential market, where you just turn around to the tenant in the flat and say, well, your rent's going up by £200 a month or whatever it's going up by. There's different comparisons. It's a bit like apples and pears. So I would suggest that you've got to take all of that into account. The yield levels have pushed out. So using a weather forecast as a way of comparing it, we've had a bit of a low come in from the Atlantic. Yields have gone out, so investment properties become slightly cheaper. So you're looking at 6, 7, 8% yields on a lot of the stock, unless it's stock where there is rental growth. So the warehouse market yields were around about 4.5%, 5% pre-pandemic. So if you were getting, I just use an easy figure, it's roughly right, £10 a foot for a warehouse property as a landlord. You are now up to the mid-teens for quality stock. You're into the £20 per square foot. So you might have bought at 4 or 5%, but because rents have gone up, your intermediate yield is now pushing towards 10%. So there's an angle towards seeing where the market happens to be going, as well as at the point at which you're buying in. And we're seeing that opportunistically across different sectors. So the children day nursery sector, there's serious demand in that. Rents are moving up. Community uses, veterinary practice, dental practices, so on, their rents are increasing because there's the catchment keeps on, the number of people in the country keeps going up.
It's a good point, isn't it? You can look at trends. So pandemic, the world and his wife got a dog or a cat. So in a year or 2 years' time, you're going to see the knock on that more veterinary surgeries are going to have to expand and go to bigger premises as a knock-on effect. People start shopping online, or people start online shops. When they expand, they're going to need to move out of the garage and into a small light industrial warehouse in order to scale their business. It's just whether those things are a flash in the pan or whether those things are long-term trends, I suppose, is the risk or the gamble that you have to take as a buyer.
Yeah, the UK hasn't gone into recession, and everyone.
No, I mean we keep talking about. Well, we don't, but everybody else seems to keep talking about it. The economy's only grown 0.5%, which means we could go into recession. No, it meant the economy grew 0.5%.
Yeah,
and we'll probably do that next quarter too.
Well, interestingly, Germany went into negative growth, whereas we didn't. Germany is very industrial, which I'm very jealous of because I think we've lost our industrial base. So it's very rarely that we go around an engineering factory. We're dealing with one in Heston at the moment, and it was a delight to walk in and see lathes and cutting and people actually producing something, because normally we walk into a warehouse and it's full of goods that are being shifted from overseas,
from China to somewhere,
and then on to the house. So we're slightly fortunate that we're not as reliant on power, having come out of going through the Ukraine-Russian war, which is horrendous, and everything else that's going on in the world that's a bit negative at the moment. But we are very much a service-related economy. So I can see that in other sectors like the office sector, although people say, well, we're all working from home, the travel is going in the opposite direction. CEOs, senior management want their staff back in the office. The office has just changed the nature of itself. And even though we're in a low growth economy, I think that economy will be pushed, and the office sector will recover, and the rents will start to go back up. So now is not a bad time to be going in and trying to buy some fairly cutely priced office stock. There's something else to watch out for within that, which is grade listed property, slightly expensive to maintain, more than the modern premises, but you don't pay business rates, whilst grade listed property is vacant. So there are sort of little angles to play around with to work out what are you going to do with the building. So you might buy something with vacant possession, and then work out a scheme to get it tenanted up. So there's all that. There's an awful lot to think through the commercial property ladder.
Yeah, and it's a great forecast that you've just given on office and based property there. That, yeah, we do hear every day that people want their staff back to the office. My team enjoy working in an office or having a base to come into. It's not as if we drag everybody in every day, but we're seeing more and more people in the office more and more of the time now by choice.
We acquired some offices for a client in Brighton as a tenant rather than as an investment. I was talking to them a couple of weeks ago just to see how things were going. And they said we were in the office all together last Tuesday. We got so much done. I thought, yeah, that's what happens.
Yeah, it does help.
I think the novelty of working from home has worn off slightly. You know, people that I speak to that have been working at home for 2 years plus now, they're going back into the office 3-4 days a week because they find it boring working from home, or mentally because it's just them at home. They're not in the right frame of mind, which affects their work that they do at home. Some have found that they've become a bit lazy doing working from home.
It's got its pros and cons. I mean, I can't imagine being a new graduate or apprentice or inexperienced person being given a job and working from home, because most of the experience I acquired was by the osmosis of having experienced people around me who could coach and help and mentor every time I spoke to someone or did something, get some feedback on what I was doing rather than be totally anonymous at the end of a Teams or a Zoom call. So going back to your warehouse, at £1.2 million purchase, 9 to 10% return. Who's your buyer? How? Not literally who's your buyer, but we don't need names. Who typically buys that? How and why?
So that example, we had interest from business people who had very successful businesses and were just wanting to diversify their base. So buy something, rent it, that's lovely, lock it away, and we've got the rent coming in. Whether they put it on their balance sheet for their main business or whether they have a separate property company that they set up, through to large industrial-based specialists who look at an opportunity and think, yeah, okay, well, that's it. We've got the cash, let's go and buy it. A lot of it is cash-based because commercial mortgages are more expensive than your residential mortgage. So we tend to find that it's a business purchase. On an individual level, the lot size would be a little bit smaller than 1.2 million usually. It's not really a property company at 1.2, although there are people with that amount of money around that might speculate. We have, for example, in Windsor Town Centre at the moment, a restaurant where 50% of it is owned by one party, 50% by another. I know them both. One of them has come along and said, actually, for family reasons, we'd rather not have our 50% ownership. Can you please find someone to buy it? So the rent on that is over £40,000 a year. Half of that rent is going to be at just over £20,000 a year, and they would be looking at £275,000 as a sale price. So, and it's let on a long lease to a tenant with a full repairing. So they're responsible for the lights and the boilers and everything at the roof, everything else. So they deal with that. That's showing around a 7.5% to 8% yield. Rent review coming up in 18 months' time. So that's kind of, you talk to your friends and your mates at that kind of level, our database, if you like, and say, what do you think? And again, that's attractive for a different type of purchaser. So they can just buy that, think, well, that's great, get paid rent monthly. Lovely.
It's your equivalent of a really long-term savings account, ISA kind of level of risk.
Yeah, with some exit route in the future, we just hold it and keep going. But restaurant, food and beverage has been very popular. The planning use class has opened up in September 2020. So where you had a shop, it had to stay as a shop. Where you had a restaurant, it has to stay as a restaurant. Where you had an estate agent, it would have to stay as an estate agent. And then the government, in their wisdom, and it was wise, said, look, actually, we want the high streets to thrive. So let's just make the planning process easier, and we'll give permitted rights on whole use class across the board. So you don't have to go and get a restaurant use for a shop.
Quick question: how many coffee shops is enough coffee shops?
Enough.
I see about 10 on the high street within the space of 100 yards.
All full.
Yeah.
Incredible.
There are certain towns where we just say, please, no. No.
I wonder how you pick the coffee shop that you want to drink coffee in. They're all full, right?
Yeah.
So
people have their favourites. It's like people have they'll go to war over whether they're a Starbucks or a Costa.
Type of coffee being used
and
all of that.
Depends on who your drug dealer is. Get that caffeine. But it's the same with barbers.
Absolutely, yeah. Barbers is exactly the same. How many barbers does one town need? It seems to be endless.
Well, we tend to come across the saturation point when it's reached its limit.
Yeah.
And then suddenly a particular type of user stops paying rent.
Right, yeah.
We had one where we had a lovely landlord. He had a 6-month rent deposit. And we thought the barber looked slightly dodgy, and he did a runner.
Okie dokie.
Well, you've got your 6-month rent deposit. He said, well, actually, no, they haven't been paying rent for 6 months.
Right.
Okay, well, you should have flagged this up sooner. So there is an.
So if you buy as a landlord, the advice on that side is that, if you've got maybe a retail premises and you can see 8 barbers from your front door and a barber approaches you, are you making selective decisions, or with your agent, are you making selective decisions of this person's making a bad business decision rather than, hey, we've got a tenant?
Yeah. So we will tend to steer clients, whether they're the landlord looking at their existing portfolio or a new entrant into the market buying an investment, just say, look, this is where the market is for this village or this town. That's what we need to concentrate on.
Yeah. That's interesting. So one of the main, as a business owner myself and yourself, one of the main reasons I see is attractive for owning commercial property is how you can own it, which I think a lot of our listeners are business owners, but maybe don't appreciate that you can invest in a commercial property in a slightly different way. We can hold a commercial property in a slightly different way, which is very, very beneficial to your pension. Is that something you can give us 2 minutes to explain on?
Okay, so so you can buy through your pension pot, through your SIP. Best to have your financial advisor help you through that process. But yes, you can. It's a very tax efficient way of getting into the market. You don't have to go, presumably, if you've got enough of a pot of money there, you don't have to go to one of the high street banks or one of the specialist financial houses to get the money. You've got 250, 300, 400,000 pounds there. You can think, right, okay, well, actually, I'd rather get a known return of 6, 7, 8% from a commercial property as opposed to leaving my unit trust or whichever pension fund it is, the PRU or whoever you happen to be with, struggling to get me 3%, 4% maybe, and then charging me 1% for the privilege of telling me how wonderful
this is. I've always been reasonably critical but unqualified when talking about pensions, because any employer pension that I've ever had doesn't perform. I feel like if I invested £1 in every one of the FTSE 250 companies, I would outperform my own pension confidently
there was
as well.
A goldfish that did that, apparently.
What's there?
Outplayed a fund manager.
Yeah.
And depending on which half of the fish tank the fish was in, depending on what they did with the stocks and shares, the fish made more money.
Okay, yeah. There was similar prediction models in a couple of World Cups, wasn't there? There was an octopus at one point. Yeah,
there was. Very clever octopus.
And that says it all. I mean, because if you put yourself in the position of a small, medium business owner, maybe a plumbing company that now has 6 vans on the road that needs a base with an office and some storage and somewhere to keep their vans, and you've made good profit over the years. Well, taking that commercial premises in your own self-invested pension means that your business effectively is funding your pension whilst acquiring property. Seems to be a really sensible way of growing the business, stabilizing the business, and making it tax efficient at the same time, because maybe business owners, whilst encouraged by our accountants, aren't the best at thinking about the future.
Well, we're very much in the present a lot of the time.
Yeah, absolutely. Yeah.
So, having done this for a lamentable number of years, 40-ish, and as an expert witness surveyor as well, I do get involved in a lot of the detail that comes behind valuing, what's it worth, where's it going. I've seen over those years, I'm now acting for the next generation and even the generation after that generation from when I started. So I've seen business owners come along and buy as owner-occupiers, and that also is a nice thing to be able to do. If you have a long-standing need for a building, try and buy it. And now they're retiring, or their business has moved on, or they've got other horizons they want to deal with, and we let them out. And then eventually, and it's happening now, they think, oh, well, maybe I just want to realize the capital, and they sell. So there's that whole, if you like, investor journey that goes on.
Yeah.
And then what they do with the money, I don't know.
It's just nice to have the money there to go on. If you've, you're thinking,
cruise.
right, well, the business is, the property's worth £500,000 and I'm 80. There's plenty of time to spend that £500,000, isn't there, rather than having the drip.
We've got clients in their 90s, God bless them, who turn around and said, actually, this office block that I've got near Staines Station, I'd rather just sell it. And it's multi-tenanted with a few voids. I really can't be bothered anymore.
Yeah, and it's just, you see the same story with buy-to-let investors. It runs its race for somebody. It's done its job through that period, and when you can see that kind of length of time end in sight of, right, I've probably got 5 or 10 years worth of being a retired spender rather than someone who sits and doesn't do anything because I'm past the spending stage, then I say fair play. It is what it is on that time. Have you seen commercial rates increase in the same way that residential have over the 20-30 year period? Do we see the same doubling of property values just because it stands on the same land as a residential property?
No, which makes commercial property quite a good buy because it hasn't gone up double, treble, quadruple, however much that has. It's been quite stable. I think the income levels from it have been relatively stable. We've now seen some changes in the market, which we've touched on already, like retail rents going up a bit, warehouse rents going up significantly, but they tend to be long-term holds. It's not as emotive as the residential market. When you're having in a dinner party or something, and they're talking about, oh, we just bought another apartment, buy to let, which was probably all the talk 7-8 years ago.
Yeah, absolutely. Yeah,
that fueled its own little wagon. So we don't have the highs and the lows that the residential market does. Through the 90s, it was pretty dire. I wish, in hindsight, that I bought lots of residential property in the 90s because looking back, it would have been good. It was cheap.
Yes. Expensive to borrow the money though, so there's
It was
always
then.
the barrier, isn't
I
there?
think the residential market has does have itself clouded in emotive issues as to why you buy. You're keeping up with Bill,
Yep.
John, and Raj, and everyone else in your group.
And the same reason for disposing as well. Like you say, because there's so many more touch points with residential, we have landlords who, they don't hear from their tenant for a year, but then they have 3 maintenance jobs in a week, and you just get, oh, bloody hell, let's just sell it.
Yeah.
Yeah.
And you have to just take them back a couple of steps to remind them that a broken tap, a sticky lock, and a door that needs rehanging is not the end of the world. They have collected £18,000 in rent since the last thing went wrong. But obviously the commercial side of things, you don't have the tenant changeover. You don't have the same issues with day-to-day repair because you're letting something on a full repairing lease. And that tenant is likely to be there for, as you say, 5, 10, 15 years plus. So it's a bit more of a spreadsheet investment.
It is
than a day-to-day.
It's a long-term goal investment, isn't it? Commercial property. If you're looking at, investing for 5, 10, 15 years, some of the current landlords that we speak to are not looking at it as a long-term investment. They might want to do it for 2 years, sell, buy something else, or release some of the equity to invest in something else. So you've got your short-term investors, you've got your long-term investors. I think commercial property is sort of maybe sitting in the longer term investment sort of category. But if you can do it and spread the risk of your investment or diversify your portfolio, then it's definitely something to look into. It's just that knowledge piece that people need to look into it more.
It's not as scary as it might feel from the outside. When everyone goes down the high street, don't they, and sees the shops and the offices, and a lot of the offices need filling up because of the right sizing that's been going on, but that will happen. So it's more about, I think, the legal side. What's a commercial lease look like?
Yeah.
They can look a bit daunting. They're sort of 50, 60, 70 pages long, some of them.
Yeah.
But the law has developed faster commercially than it has residentially, which is why there's the bill going through Parliament at the moment to try and bring the residential sector more in tune with the commercial sector. So I can see the two will blend. The commercial market will seem less scary is the wrong word, but less of an obstacle to get into. It needs setting up properly to begin with, and you need a proper lease. There are all sorts of regulations now that were nowhere around when I started. It was like the Wild West when I began. EPCs, asbestos registers, fire risk assessment, fire risk management. That's just a few little things off the top of my head that are part of a plethora of other rules and regulations that have come in. You've also got the cost of purchase, so you've got to pay your stamp duty on it. Is the property elected for VAT? What do you do about that? There are things like being able to put it into a class as trading as a going concern, so the VAT issue disappears. So there's lots to it, but I'd say grasp it rather than sort of put it in the filing cabinet for maybe sometime later.
So if you sat here with upwards of £250,000 in your business bank account to invest, where do you start? Because if you've got £250,000 or half of that and you're looking at buy to let, you tend to start on Rightmove. It's the obvious go-to. Where on earth do you start? You think, right, okay, this sounds good. Commercial property is worth looking into. What's your first, second, and third moves as a potential buyer?
Well, the second one's Zoopla. We tend not to advertise that much with Rightmove because Rightmove is so expensive, and that's simply to try and look at our own cost base.
Yep.
For
those of you out there, Rightmove is about 10 times the price of Zoopla.
It's a lot more expensive.
Just to throw a shock.
I can't go into comparing the two because I don't want to have a dissing contest between two of the big names out there.
Right News have had enough of us from the last 2 weeks. Podcast episodes dropping their name in there. So, yeah.
Well, they're trying to sort of recover, aren't they, at the moment, in terms of the slightly bad press that they've had and their future. And
it's, strange business, loved by the public, hated by its customers, but we'll leave it at that. Yeah. So start on a Zoopla, for example.
Within your territory, just look up who the most active commercial property agents happen to be and have a chat with a few of them. If you want them, we're very friendly and reactive, so we'll get back to people or we'll have a chat and talk things through. And the commercial property market can seem as though it's a bit standoffish and a bit snooty, whereas it's not really. So don't be put off by having to pick a phone up to someone and have a chat rather than just see what's online, because you'll get a bit more knowledge through a telephone conversation.
I think that's a really good point, because the residential market is quite often very well advertised, but then very shallow when you talk to someone in knowledge, whereas the commercial market, from what I see, tends to be probably very poorly marketed. But then when you speak to someone with an absolute encyclopedic knowledge about what they're doing and how they're doing it. So
yeah, well, that's
find one of those 100 coffee shops in your town and sit down with someone is probably the best shout. Whereas you might not want to talk to an estate agent for long enough with a coffee.
Talk to a local regional agent. We get lots of the big town agents ringing us up for information, for encyclopedic knowledge that we have.
Yes,
which I feel slightly schizophrenic about. So during the pandemic, I thought, well, I am an encyclopedic on this. So I got onto our institution, the RICS, and said, can I actually become an expert? Is there such a thing as becoming a formally qualified expert? And they said, you can. Yeah, it's a bit of hard work, but you can do it. So in order to put some letters at the end of that knowledge, there are a few surveyors in the area who are acknowledged as experts. So have a chat with them if you can. Well, I'm one of them. But there aren't that many of us, which is probably why we're so poorly marketed.
So last up, I think we've had one prediction from you, which is that the office market is due a good increase over the next few years of occupation levels. I've seen from Bracknell bid particularly that Bracknell's take up on office space is much higher than the national average already in the last couple of weeks. What are your thoughts on hotspots and the right types of buys for the next few years?
So I don't think the right type of buy for an office is sit back and, oh, that's great, I've got a tenant in there for the next 5-10 years paying X per square foot and a yield of Y. The office market is developed because people like working from home, and you have to have an office that's more attractive to work from than working from home. So the office sector is waking up to that, and there's a flight to quality. So in its simplest form, you have to make the commute worth it. Mm-hmm. So the older style, shabby sort of office, anyone will fill it, don't worry about it type of sector really doesn't tick. So if you are looking to buy into the office market, either buy something that is in need of an refurbishment, upgrading, and then you'll benefit from getting a decent rent, or buy a product that is already quality, but there won't be as much profit in that.
Yeah,
because there's
someone else will be already taking that.
Risk.
Yeah.
It's becoming harder to turn offices into flats. I don't think the residential market is oversubscribed. There always seems to be demand for residential space, but the local authorities around here are making it more difficult for offices to be bought and then converted. You have to prove economic loss. And Windsor, for example, is a town lost 1/3 of its office stock. So already there's 1/3 less biscuits in that tin. So Bracknell, as you said, there's been good take up. So the market supply is diminishing, therefore the rents will improve. It's a good time to get into.
Yeah, it's commodity based, right? If you're one of 1,000, it's not a particularly valuable commodity. But if that 1,000 halves,
yeah, we have certain towns which always command rental premiums. We always get an argument from people looking around here, well, I'll go to Slough. All right, go to Slough then. If you don't want to be in Windsor, or you don't want to be in Egham, or you don't want to be Virginia Water, go to Slough.
Yeah,
it's horses for courses, isn't it? So there are different rental tones for different towns, different areas. But there is good demand there. It's a false horizon to make people think, oh, I can just go and get an office deal anywhere I want to. If you're a tenant, you whittle it down. I don't want to waffle on too much, but it's easier in the residential sector because you have a 1-bedroom flat, 2-bedroom flat, maybe a terrace, semi-detached, whatever. Whereas in the office sector, it's sort of how many people do you need to get in? It can vary between 500 square feet, 1,000 square feet, 45,000 square feet, 25,000 square feet, depending on your head count, what you're doing, where you're going. Do you have one office? Do you have satellite offices? How do you operate? So we have a client that bought a vacant office in Windsor about 5 months ago, completely renovated it, chopped it up into small suites, if you like, the equivalent to 1 or 2 or 3 bedroom apartment sort of levels, but within the office sector. And we're filling that up with occupiers in the area who want flexibility. And that's commanding premium rents. It's got parking on site. It's got all the tick boxes. So that's from a fairly savvy property investor. It's a family company. And it's going well. And we're achieving better rents for those smaller suites as you'd expect. And they're filling up.
Great. Well, Chris, thanks for joining us and explaining some of the mysteries around it. As ever, at the bottom of the podcast, on the show notes, Christopher Thomas's details, contact details, links to his website will be there. If you've got any direct questions, feel free to either pop them on the social link or go direct. I'm sure he'll be happy to, like I say, if you buy him his coffee, have that conversation with you. But again, thanks for joining us and taking the time out of your day to do so. Till the next episode, we'll see you then. Why have we made the Investors Corner podcast, Ian?
I think online at the moment there is just way too much noise, waffle and nonsense. Everyone's got an agenda. So the goal was to make a podcast for people that want to invest money in property or other areas where there's no waffle, there's no nonsense, there's no agenda. It's opinion-led, but it's an honest opinion. And it might not be the right answer, but we're going to share it.
So on the podcast, we're going to supply people with access to mortgage brokers, financial advisors, planning experts, development consultants, everything around the property industry and the wider fields.
Yeah, so if you're looking at investing in the future, you know that just having an income from your employer or from your business is not enough to give you the life that you want down the line. We're going to hopefully give you some of those answers that will give you the solutions you need for the future.
So please hit the subscribe button. The more subscribers we get, the better guests that we can get on and the more people that we can reach. So hit subscribe.